Breaking news this afternoon, the Federal Reserve decides to leave interest rates unchanged despite President Trump's continued request. Rates were last lowered in December, and since then, the central bank has kept rates flat in part because of the uncertainty of how tariffs will impact the economy. Business reporter Alexis Christoforous has been following this for us. And Alexis, what is the Fed saying about this decision, and also what does it mean for the economy?
Well, I think what it means for consumers, Alex, is they should expect interest rates to remain higher for longer. The Fed making pretty clear in this decision today that they're comfortable with their wait and see approach. This is the fourth straight meeting the Fed has left interest rates unchanged. And in part of their statement released just moments ago, it didn't change much from the May meeting. The Fed saying that broadly speaking, the economy grew at a, quote, solid pace with low unemployment and, quote, somewhat elevated inflation. I do want to point out their expectations for inflation this year expected to hit 3%. They're also expecting economic growth to slow a bit to a pace of 1.4%. But when you look at all that's changed, Alex, between the last Fed meeting in May and this Fed meeting, we've gotten hard data that shows the tariffs have not really hit inflation just yet. Hiring is continuing to slow down at a gradual pace. And now, of course, we have the unrest in the Middle East, which could cause oil prices to spike. We know oil can be inflationary, and so the Fed looking for more certainty on economic policies coming out of the White House before they pull the trigger and decide to cut interest rates at all this year.
Well, and you mentioned oil prices. It's summer travel season, number one, and then we have that tension in the Middle East between Israel and Iran. The other thing that we're monitoring is how does Russia respond to this with the price of oil? Do they raise it? But what are you watching for specifically whenever it comes to the oil markets?
For the oil markets, this really depends on how long this conflict lasts and if it widens, because once we saw the conflict happen, gas prices rose about 15 cents a gallon as crude oil started to rise. There are some analysts who are saying that if this drags on, we could see prices at the pump rise by 40 cents a gallon in the matter of weeks. We haven't seen crude oil above $100 a barrel since 2022. It's about $74 a barrel right now, but you can bet that traders are keeping a very close eye on the oil pits right now. And I do also want to mention, back to the Fed for a moment, it looks as though Fed policymakers are still penciling in 2 interest rate cuts before the end of the year. Some economists now expecting that might come in September. Alex?
All right, well, stay tuned. Alexis, thank you.